Traders, welcome back to another price action trading lesson. We're going to use price action to help us identify what the market is telling us. And right now the downtrend is the pattern. So as a price action trader, I have to look at the right key entry point because there's a reason to every price movement. So what's going through my mind? Well, as you can see, we are breaking the downtrend, break right here. So I'm expecting for price action to test the new extreme. But even though I expect for price action to test the new extreme, I cannot sell just yet. This is micro double bottom can reset. I'm looking for breaks below bars lows for a entry short. So I would like to see that two-legged pullback at the key entry point, at the EMA. So new low for a entry short can get a two-legged pullback at the EMA. We already have a break and a new extreme. Okay, so the sellers tested the new low immediately. So downtrend played out. And right now what I have to do is I have to pause looking to sell. And I'm just going to objectively observe what the market is doing. Now I can see some uptrend working higher. So I'm going to connect these swings at the bottom to draw uptrend working higher, and we have another second entry short. Can you take it? No. Number one, downtrend already played out with the break, moved to a new extreme. Number two, the uptrend is still in play. And number three, 1 2 3 4 5 6 bars stacked right next to each other, EMA exactly in the middle of these bars. So this is what we call congestion. This is no trade zone. In fact, once you have a break in your extreme and you can see some push above EMA, what's going through your mind is a possibility of failed second entry short forming because downtrend played out. Now this is a tempting signal bar, but problem is look at the congestion EMA exactly in the middle of these bars. This is not really what we want to see. Plus, it is mainly below EMA. Now, if you thought about failed second entry short, your idea is actually good. You're expecting price action to go higher, which is correct. Problem is the congestion. The market just opened, so it's better just to be patient and not take a risk. Take the setup in congestion, but it's a decent setup to consider. And I can also draw a slightly wider uptrend and still keep the structure intact, something like this. So market is going sideways. There is no setup here. More bars stacked right next to each other, so another congestion. So as you can see, we don't like to be trading these areas because your edge is completely dissipating. A lot of bars stacked right next to each other. We have possible failed breakout because most breakouts out of these congestion areas will fail, but it didn't trigger. This bar was way too big. You can see there's an inside bar, so it's better to be patient. High low also didn't trigger, and now you have small two legs, leg one, pull back, leg two to new extreme, even for the wider channel. So all channels played out, uptrend, break, two-legged pullback to new extreme. Now I'm going to zoom back, and the structure is a trend range because we have move up, move down, move up, flat EMA. So we're not looking to be drawing any wider channels, something like this just yet. We have to follow the short-term structure of this trend range. This is a decent entry because this is not only failed breakout out of this consolidation, it broke higher, all options played out. There's also second entry short. So this is a second entry short and failed breakout, but this is way more advanced setup. I can mark it, but because you're still above EMA, you have to understand what is happening in the market, that the consolidation is the pattern with the bearish bias, but it's a decent setup. Market is trending lower, and as I can see EMA flattening, and I can see consistent price swings up and down, it starts to resemble consolidation. So as a price action trader, when I think there may be a consolidation, and I'm getting signs from the market to confirm it, I have to project possible areas where the key levels are, where the extremes are. And in the meantime, I still follow the short-term trend line rule because this is what gives me the bearish bias, the bias overall. On the way down, we had bearish bias because we expected a break in extreme. Now we expected a break in new high, and now we have a downtrend working lower. We're breaking, so we expect new low to be tested. Okay, we have a new low for a entry short. We have a second entry short, but it's a horrible doji. Inside bar, double inside bar, that, you know, this is horrible stacked area. I can't take it even though we expect new extreme. It literally looks like a barcode, so I have to be careful. I can't really touch this. We have a break and move to new extreme, and we have quite a nice bullish bar. Downtrend played out, and this is what you would call another failed breakout. It's not a horrible setup, but let's zoom back and think about the structure. Number one, we traded down into this consolidation. Number two, does this resemble a consistent established trend range? So this is what you have to ask yourself, because not every single structure is going to be a healthy, consistent trend range where you can immediately start selling or buying at the extremes, okay? Because the market cycle may just be shifting, or there can be some bigger pattern. You always want to be fitting the breakout where you can trust the trend range that it has consistent price swings up and down. It's been a long sideways structure. We have a lot of empty room here, a lot of empty room here. So we trade it down. Trend range is not as established. And more importantly, look at the EMA rejections. So many EMA rejections here, telling you that it is way more bearish. Now, if you went long here, I can see why. It is way more aggressive. But you had the right idea. The signal bar is bullish. It is quite slow, so there is a chance we're going to pull back following the price action. It worked, but it is a little bit more aggressive. It is better to wait for at least for higher low, and preferably some proven uptrend pushing above the EMA. This is what I'm expecting is going to happen. Let's see what's going to happen. And we are going all the way down here. So this is important. This confirmed the bearish bias because you can't even break the midline of this trend range, okay? Why only first entry short generated such a significant push face down? Okay, there can be some bigger pattern, but it's not so obvious to see just yet. This doesn't look that bad. As you can see, we can draw something like this if you're thinking about this, but I was playing the short-term aspect of the price action because the downtrend is very, very weak, but this is something you can consider, but you can never go wrong playing short-term trend lines with the bearish bias. As you can see, we have overshoot, so we can expect stronger pullback in the opposite direction, but hopefully it makes sense. The fact that you can't even break the midline here, massive push down, that's telling you that there is the bearish bias. First entry short, there is no second entry short. Why there is no second entry short? Because after first entry short, you need to see pullback. What is a pullback? Break above either one of these bars highs. New low, break lower, first entry short, no pullback, no pullback, no pullback. And by the time we get a second entry short, it is of course above EMA, so you cannot sell. We had overshoot, we have a break, and then new extreme. And what I can do, I can project the possible measured move. One leg, break, second leg, we reached it, and market broke back below the EMA. Now, if you're playing wider uptrend, something like this, you can see it doesn't have third swing confirmation. We broke below EMA again, and the main bias was bearish. We traded down. In fact, there's a possibility for bigger, wider downtrend. So because it resembles a broad two-legged pullback with the measured move, there is no third swing confirmation, and you're back below EMA. This is not good, so you're better off playing the short-term aspect of price action like this. Main bias was bearish, two legs up, new high. You cannot take a failed second entry long below bullish bar, but what I was looking for now is lower high breakout pullback, something like this. Break lower, pull back, lower high would also confirm new high, kind of like a first entry long, pullback, second entry long failure. Or you can consider this double top, reset the count, because these two legs are so broad, you can treat it as a new high, first entry long, second entry long failure. But it never formed. Market consistently traded lower all the way down here, and this was a significant push phase. So I had to ask myself, hold on, why we created such a significant push phase down? There was probably the bigger downtrend. So we can draw a break and a new extreme. By the way, this is the low of the day, where I always mark because this can give me important information throughout the day. So even the bigger downtrend played out with the break and new extreme, but there is no way for us to jump on board this, okay? We cannot sell here, nothing to sell here. So, you know, slow day, not too many setups so far. Breaking new low, let's see what's gonna happen. Massive push above EMA, I'm gonna redraw a brand new uptrend working higher. We have mini break and new extreme. Problem is, we didn't touch the EMA and the break is not convincing, okay? It still looks like a one strong spike working higher, okay? You can see it looks still like a one leg working higher. Let's see what's gonna happen. I'm gonna redraw a brand new downtrend working lower. I cannot go long, downtrend is in play. I cannot sell. We are at the low of the day and EMA is flattening, downtrend played out, so it is way too sideways, way too rangy. Let's see what's gonna happen. Breaking extreme, okay, downtrend played out. Push above EMA, and this is interesting. This is high low. And this high low confirmed the support, push above EMA, and it looks like because downtrend played out and EMA flattening, we may get the technical real new high to this strong bullish spike. So this is actually a decent high probability setup to consider. High low confirmation setup. We created a break and the new extreme. At this point I was thinking about some possible channel. I was looking for some spike and channel like this, something like this, but we broke lower here, so I deleted it. Then I was thinking about some potential spike and wider channel like this, but there is so much empty room here. Second entry long below EMA I cannot take. Can we get a high low above EMA? We cannot. And now it's getting way too sideways and way too late. So this is the entire structure for today. Very slow day. I didn't take any setup today, as you can see. Even in hindsight, very few setups to choose from. Basically this day is only helpful for you to practice patience, and if you are fully objective and honest with yourself, you can feel that you can't really understand exactly what the market is doing, or if your key entry point is confirmed. It was just quite choppy, very weak downtrend working lower, and now after we have a break in extreme, you don't even have that many opportunities to go long, not even confirmed nice bullish uptrend working higher. So if you didn't take any setup today, definitely don't beat yourself over this, because this is completely normal. Even in hindsight, there aren't that many setups to consider today, but it's okay if you remain patient. At least you're building the right foundation that's gonna make trading easier for you in the long run. Because if you can sit here patient and not get really frustrated, not think that the market is going against you, that is exactly the right mindset you need to have to make your trading easier in the long run. So short chart lesson today, but I don't really see too much to talk about. You know, we didn't break past the midline here, so the bearish bias kicked in to like a pullback. This would be a nice area for the lower high confirmation setup, or with come recent fell second entry long. It just didn't form, and pretty much towards the close, once again another sideways consolidation. So slow day, not that many setups. We'll see if tomorrow will produce better opportunities. I hope you had a decent trading day. I'm gonna wrap it up. I'm gonna talk to you next time. Good luck with your trading.